Hello traders, this is a breakdown of my top 5 trades from last week, and it was covering markets like US oil, pound yen, Aussie dollar, Aussie yen and Aussie New Zealand. And I want to share the analysis behind the trades because it will help you understand my reasoning and logic, as these trades were sent out into the Signal channel for members. So many of you would have also taken the trades, and these particular trades use all different types of analysis techniques. Some are very, very basic, which will be covered in the free course that you can get on the website. Check the links in the description below and the article to get access to that. It's all up on the website. And of course there are much more advanced excellent techniques that you can get access to as a full member, so you can find out more about that. Okay, let's jump in. Alright, so this was the US oil trade. So this was the signal up here. It was a sell from 65.83 with a stop loss at 67, and the original target was open, but I've kind of changed it to 60. Got out of the trade on Friday evening, and this was the thought process. So you can see the volume profile on the left, huge low volume zone right in the middle here. The value area is actually in the bottom half of the profile, and you can see from this consolidation here, this was the first period. It's not quite a Darvas zone, but it is a range that I had measured out, and then it doubled up. So you just take the same thing, double it up, and you can see how it reached the top of that double up section. And what really interested me was the fact that if we got a break to the downside, we were probably going to aim for this value area down here. And I spotted that there was a simple upsloping low to low trend line forming, but there was also accelerating double divergence. So divergence is basically a technique you can use. It's very simple. You look for peaks on the oscillator versus peaks on price action. So in this case I'm looking for regular bearish divergence, which is a higher high on price and a lower high on the oscillator. And just regular bearish divergence is often strong enough, but when you get double divergence it's more interesting, especially when the trajectory of the peaks of price action increase. Like for example, this was the first one, high high on price, lower low on the oscillator, but then the second peak was even higher, and then the oscillator was inverse to that. So really, really interesting. And so once we were kind of getting to that stage, I decided to get into a trade. The break of that trend line was very, very interesting, and of course you can see what happened after that. It was a really, really nice move to the downside. So 300 odd points or pips taken out of that trade. I was very, very pleased. So that was my trade number 1. I was very, very pleased with that. The second one was pound yen. It was this one over here. I took 2 trades on this one, and I normally go for half risk on pound yen because it's a volatile market and it can be pretty dangerous to trade. The idea was pretty basic. It got these blue swing markers here that was marking out what the trend was doing. A series of lower lows, lower highs. We had this upsloping simple low to low trend line that was broken, tagged and kissed goodbye on the underside. So that was my entrance into a trade. We also had this Darvas box that was broken to the downside here, which kind of made me think I'll have a go and double up on that. Wrong terminology, not double up, but get a second trade going. And once we tagged the underside of that Darvas break, I thought that might be the opportunity to get in. It did break a little higher. There was a bit of drawdown on this trade, but didn't actually break above this range high, so I was quite pleased with that. And again, went to the downside quite comfortably. Both of those hit target. So again, really, really nice opportunity that was taken. And number 3 was the Aussie. Now the Aussie was interesting because originally it had been in a bullish trend. You can see the blue swing markers, series of higher highs and higher lows. We've got a very basic trend line. It's an upsloper, low to low trend line that was broken over here at the same time that this, I mean, you could call that a head and shoulders pattern, you could call it action center reaction, call it whatever you want, but effectively it's a breakdown, and that trend finished. There was a changing behavior, and the warning signs were kind of here with these rejection candles. So there was zones of rejection that were happening here, and this was the main failure that attracted me, because once we had failed to break above this high, it looked like it was a possibility that we could start to have a trend reversal. And once we got this mini breakdown through that trend line, I was happy to have a go at it, choosing this as a stop loss just simply because it was the high, or this final shoulder from this rejection over here. So that was interesting to me. Targeting a round number, and off it went straight down to the target. Very pleased with that. So that was number 3. Number 4 was Australian yen, and so this one, I believe this was a previous trade that didn't work out, so I'll just remove that. You can find all of these trade details on the website. But again, similar to the Aussie dollar, it was in a previously bullish trend. Entered into this kind of unusual choppy phase, and it was broken down once we took out 79.90. Again, there were some warning signs. We got this rejection candle over here that interested me. But I actually had this fork line set here, this down sloping fork from these pivots 1, 2, 3. And I noticed that there was a peel away from the upper median line parallel, and then a rejection on the second attempt at the upper median line parallel, of which each time it bounced off the median line and then broke the median line. So that was interesting. So I was watching that, and it got a tag from the underside of the median line, double bottom, tag from the underside of the median line, compression into the underside of the median line, failed to break the previous high, clear downtrend developing. And once that double bottom had started to fail, then it was interesting to get into a short, so I took that. And off it went, down to target. Pleased. Yeah, nice trade. And the other one that I picked was the Australian New Zealand. And again, the Aussie did well for me last week. I was very pleased with it. But again, similar sort of situation. Got this low volume void over here. 2 clearly defined higher volume zones. The top one was carved out through all of this price action over here. But what I found interesting was this rejection up here. As soon as it was rejected in this zone, it traded sideways, and the Davis zone was broken to the downside and held, which was interesting. And then there was a clear attempt to take out some of this low volume zone. Price was rejected at higher levels, and it would then be slapped back down to a previous value area, which I'd marked out down here. So that was the reason for getting into a short. I actually took 2 shorts on that one and got out of them a little bit early. But yeah, for a similar reason with this one, I just decided to get in on another one because the other Aussie pairs were doing quite well. So I was quite pleased to have another go. So overall, they were the top 5 that I picked. Plenty more of them to find out. All you need to do is go to the description below or check the article out and have a look at the signal results for yourself. Check out some of the other articles as well. Remember to hit the like button if you like this kind of analysis, and I'll do them more often if you do. Leave a comment and subscribe to the channel, and I'll see you again after the weekend. Alright guys, take care.